Hi everyone, and thank you for tuning in to my channel where I talk about stocks, the stock market, and investing. I post videos daily, so if this sounds like something you want to get more of, subscribe down below. Alright, in today's video I'm going to be talking about Home Depot's stock and using my 6-step framework to determine if the stock is a buy. So let's get right into it. The first step in my process is the customer value proposition. Home Depot sells home improvement goods at low prices in large stores nationwide. So they try to have what you need in stock somewhere close to you so that when you need that item, when you have an emergency at home and you need to go get something to get it fixed, Home Depot is the place you go. And Home Depot also prides itself on being the low cost provider in the industry. It aims to have the lowest prices among home improvement retailers. It also holds a customer first value or principle in that and excuse me, this is becoming apparent right now and important right now in the backdrop of rising inflation worldwide. Home Depot's management has the philosophy that when its costs go up, it is slow in raising prices on customers. And at the same time, in the opposite direction, when its costs go down, it's very quick in lowering prices for its customers. So, in both directions, it holds a customer first principle in that it tries to lower prices faster than they're falling and it tries to increase prices slower than they're rising. In that way, it favors customers. And so, partly because of its favorable customer value proposition, Home Depot's revenue has increased from 75 billion in 2013 to 151 billion in 2022. So, pretty impressive growth, especially considering that Home Depot is a brick and mortar retailer. Moving on to its the my next step, which is unit economics. Home Depot has demonstrated merchandising skill. It sustained a gross profit margin of roughly 34% over the last decade. So, as you might imagine, what Home Depot does is it buys things and marks them up a certain percent and then sells them to customers. And its ability to do that determines whether it will find success. If it buys things for too high a price and is unable to sell them to customers at higher margins, then Home Depot will not be able to sustain itself. But it has demonstrated skill in participating in this business, and its gross profit margin of 34% demonstrates that. Furthermore, it shows clear evidence of economies of scale. As Home Depot's revenue has grown from 75 billion to 150 billion in the last 10 years, its operating profit margin has increased from 10.4% to 15.2%. So almost 50% growth in its operating profit margin as well. The next step in my framework is that the business's total addressable market. I like to invest in businesses that have large and massive total addressable markets. That way, the businesses can grow without hitting a ceiling. And the home improvement industry is one of the largest markets out there. It was estimated to be worth $900 billion dollars. Competition for is one of my next steps in my 6-step framework. I like to see limited competition. I don't like to invest in industries and companies that are in the middle of fierce competitive forces. And for Home Depot, Lowe's is its biggest competitor, and there is limited competition between the two in terms of price cutting or promotional activities. You're not frequently seeing Home Depot and Lowe's trying to attract customers by sending promotional offers like a 50% off discount or $25 off your order of $25 or more. You're not seeing those kinds of activities at Home Depot and Lowe's, which is good for investors. Additionally, Home Depot is one of only a handful of brick and mortar retailers that have been able to protect themselves from Amazon, and it's because of the types of products it sells. So you can imagine some of the things you might see at Home Depot, which is maybe a 20 by 4 piece of plywood, and that would be difficult for Amazon to sell and deliver to your home at a similar price that Home Depot can do it, or a similar price that you can go and pick it up at Home Depot for. So it might cost even more to ship a product like that than the retail price of the product. So because of the type of products it sells, it's difficult for Amazon to encroach on Home Depot's business. And that's partly why it's done so well in the last decade. And it could continue for the next decade or more because it I don't see anything on the horizon that's going to make shipping products like that less costly for Amazon. One of the most important steps in my framework is valuation, and Home Depot stock is relatively inexpensive when measured by the price to earnings ratio. It's currently selling at a price to earnings ratio of 17.8, as you can see in the chart. And if we go back the last 5 years, it's hardly ever been cheaper, right? There was one time a few months ago where it was lower, and then right at the pandemic's onset when the the, the broad market crashed because of worries and uncertainty regarding the pandemic. So other than those two times, investors have rarely had an opportunity to buy Home Depot stock cheaper than it is right now. The final step in my framework is risks. For Home Depot, one of the one of the risks it faces is that homeowners' willingness to spend on their homes is correlated to rising home values. And as you might be aware, home values have risen substantially over the last 2 or 3 years, and they're starting to roll over in that month over month home prices are starting to fall. So if this trend continues and home prices fall back a little bit over the next few months, perhaps over the next year or two, that could decrease homeowners' willingness to take on projects inside their homes. Um, Another risk Home Depot is facing is home improvement fatigue. During the pandemic, home improvement projects were one of the most popular pastimes in the last couple of years. And because of that, that could be a hangover from that, where homeowners might say, you know what, I'm tired of all these projects, these home improvement projects. I want to take a break away from that for the next 6 months or 12 months or 18 months. So that could prove to be a risk for Home Depot in the near term. And lastly, the potential economic recession in the US could delay spending on home improvement projects. Of course, if people are losing their jobs and they're not getting promotions and the economy is in a recession, people are going to be more inclined to save their money and delay these unnecessary home improvement projects like upgrading your bathroom or upgrading your kitchen. These are not necessities, and if the economy is in a recession, these types of projects might get delayed, pushed down the road 6, 12, 18 months. All right, now that we've gone through the 6 steps of the framework, let's review them and then discuss the conclusion. So, Home Depot's customer value proposition we noted was good. They sell products that you need for your home, and they have stores that are likely close to you with 2,000 stores across the US. So, and they sell them at reasonable prices, and they have customer friendly principles and values. So their customer value proposition is good. Home Depot's unit economics is excellent. They sell these products at a solid gross profit margin, and they're able to grow that operating profit margin over time through economies of scale. Moreover, the total addressable market was excellent. 900 billion is a massive market size. Um, Gets an excellent grade in that regard. The competitive position in the industry was excellent. I like industries that have what Home Depot and Lowe's have right now because it limits the competition. It's close to what's called an oligopoly, where there's only two or three strong businesses in an industry and they don't feel the reason to compete with each other. You see similar trends with Pepsi and Coca-Cola, Verizon and AT&T, and so on. When you have two strong players in an industry, they are reluctant to compete with each other, at least with regard to price. So you don't see price cuts, one trying to beat the other in price cuts at the expense of investor returns. Finally, sorry, not finally, but next we considered valuation, and we noticed that Home Depot's stock was inexpensive when measured by the price to earnings ratio. And we looked at the risks, and the risks that they were facing were moderate, even though they do have risks that could delay spending in the near term. Consumers who delay a project because of a recession or because they feel their home price is declining are not completely avoiding that project. They're just delaying it. They're putting it off for 6 months, for 12 months, for 18 months. So even if they don't complete the project sooner, they will likely complete it later. So the majority of the risk that Home Depot faces is delays in project rather than losing the projects entirely. Overall, when considering everything and putting it all together, I would say Home Depot stock is a buy. And the main factors working in its favor are the inexpensive valuation, the excellent massive total addressable market, and its position in its competitive position in the industry. Light competition, and I feel it's got a nice moat around its business from Amazon's encroachment. So because of those reasons, I would say Home Depot stock is a buy. But let me know what you think. Comment down below. Let me know what you think about Home Depot stock. And if you like what you saw, please subscribe down below. And thank you for watching.
I want to thank the Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with the Motley Fool to bring you 10 stock picks from their popular Stock Advisor. Stock Advisor has beat the market by more than 250%. Go to fool.com/Parkev to get your 10 stock picks now.